Welcome to On-Chain Capital, your front row seat to the future of finance, from Web3 and AI innovation and digital asset policy to the power shift between East and West. Today, we're unpacking it all with Monica Jasuja, a payment industry expert who has spent time at PayPal, MasterCard, and Gojek. She's now the Chief Expansion and Innovation Officer at Emerging Payments Association Asia. Monica, thank you so much for coming on the show.
Thank you so much for the invitation, and I'm really looking forward to talking to you today.
Monica, so you have a very illustrious career. You and I were catching up earlier about the time that you have spent at some of the largest payment companies in the world. For the audience, maybe a short intro about your background and how you got to what you're doing today.
Thank you so much. I actually accidentally ventured into payments with PayPal, one of the first product managers hired outside the mothership, and had a career for about 8 years across multiple disciplines on the consumer side of PayPal in 3 countries, India, Singapore, and the US. And I think that love for the tooling and the infrastructure side started then, because it is fascinating how payments is so magical that everything that happens beneath the hood is actually invisible to the end user. And that's how we'd like to keep it. And then I went to MasterCard, again, was part of the amazing process of how India has now become the world leader in real-time payments, but have seen the process and the shift happen on the consumer side and the merchant side, where digitization is a huge part of our economies. And then have done product management, had strategic partnership roles before I ventured into Gojek in Indonesia. Again, Indonesia as a country and as an economy has similar attributes as many other South Asian and Southeast Asian nations, but is very, very different. So the local ethos, etc., is something you'll only be able to understand once you've worked in these markets, where the global picture of how things work completely unravels itself and does not work in these parts. So I think the global South, as we call it now, is becoming a very significant part of how payments as well as providers all across the world are changing. And now in my latest role in Emerging Payments Association Asia, we actually help not just engineer these thought leadership conversations and discussions and dialogue with payment leaders all across the world of various sizes. We actually help be the future of these conversations. And the way I describe it is, this is where payments, policy, and AI meet, because all of this coming together is what is going to shape the next future of payments, which is actually unraveling right now.
So Monica, there's a lot to unpack there, right? Your career, working at some of these largest payment companies. I mean, you've spent decades really scaling and building these companies, especially here in Asia. Now, I'm going to throw you one question first, right? Like, when we think about the Visa, the MasterCards, the PayPals of the world, that seems like such a 20-year ago name, right? These are traditional rails that has been around for a very long time. They obviously work very, very well. They are widely coverage, especially in the West from an economy perspective, but also increasingly in the emerging markets. But one thing I want to ask you, though, is, on this show, I've had many experts that have come on and really talk about the notion of blockchain-based finance and stablecoins and all of these things surrounding digital currency. Are you seeing the companies that you have helped build kind of being pushed to the background? Or are you actually seeing them formulating the backbone towards all of the new things that are happening?
Actually, it's quite the latter. This is the best part about working in these companies. The top 3 payment companies in the world are Visa, MasterCard, and PayPal. So having said that, there is something fundamental that makes them click and then makes them the backbone or a playbook of how things happen and why it needs to happen that certain way. I will say this, I'm not defending the card networks, and I'm not saying that other models will not survive, but the credit should go where it's due, that these companies are the infra layer. And I think they like to be the plumbing and the tooling rather than being front and center, which is why they're B2B companies, except for PayPal, which also obviously has a B2C component. Having said that, I think the most important piece that we should think about as an industry is that what are these companies doing? So they're actually partnering with other providers in order to actually, again, replumb what they already have as infrastructure. Now that becomes critical because they have mastered the art and the science of being available as a network component in 200 countries. Now that is not something that is easily replicable. And in fact, I will even say this, that the network effect that we require for new technology to take off, including scale and the most important piece, which is trust, can only happen if we have these large players really back up both the technology as well as the impact through scalable processes, which is scaled rollouts all through many countries, jurisdictions, wherever regulation exists, and wherever regulation doesn't exist, actually actively engage with the providers as well as the central banks in those countries to make regulation happen. And I feel that their leadership in this area is the one that will actually eventually give the trust as well as the validity to some of these new age companies and technologies, which is really required to have trust in the system. Now, trust isn't built, it's not an overnight thing. And let's be honest, emerging tech will always come with its set of bad actors and good actors, and the bad tends to get amplified a lot more than the good that is very much possible. And I will even say this, though it's one of those hard things to say, that we need the ecosystem to work together. I think gone are the days when we've had exclusionary practices because one over the other, or a zero-sum game. It's not going to be that. Payments will always continue to be the best wins, but there is going to be enough competition for that, for payment companies to not just survive but thrive in this trend. And I truly believe that those collaborative aspects of the ecosystem are actually beautifully forming together as we speak.
So, Monica, let me ask you. I agree with what you said. I think a lot of times when we look at blockchain-based technologies and this notion that the technology can be trustless, you just need to essentially use the technology and be able to kind of shortchange some of the complexities and friction that might have been in the existing system before. And you talk about this notion of really, at the end of the day, we're transacting monetary value, so we still need a trust factor that are being there. My question to you, though, is if you think about the Visa and Mastercard networks, they are predominantly Western-driven, right? Now, in places like Asia, where we are, a lot of the, I mean, you mentioned Indonesia before, right? During the time when you were spending at Gojek, Visa and like card-based transaction is not really a thing, right? We've pretty much moved from banking to then directly into direct mobile digital payments. So how would that work given the traditional card networks in terms of their penetration using the new technology, but now in these emerging markets?
That's a great question. I feel that card technology, we are underrating what these major companies do, including Swift, for example. Everybody tends to write them off very easily because they tend to be huge giants. But the fact is that the giants are not sleeping. The giants are actually reinventing themselves, but they do it in a very slow fashion. So sometimes progress gets underestimated because we are not able to see that when the giant moves, they actually move the industry with them. So again, it is not about one versus the other, but I will say this, that there are a few extraneous factors that are leading to, and we don't want to go into the geopolitical debates here, but the dominance of these players happens to be because they're also US centric. But and there have been warlike situations which have actually led to the resurgence of local payment systems and sovereignty, both as a policy as well as a national interest tool, which means that there need to be national infrastructures that need to be put into place. But this does not mean that the cross-border nature and therefore the linkages that are necessary to have a borderless world, especially where digital commerce is concerned, is not a need anymore. In fact, it is actually a bigger need now because the world is coming together, and regardless of whether we like it or not, post COVID, we have seen a resurgence of both travel as well as of commerce happening across nations. Therefore, I actually feel we are moving to a new paradigm now where we are in a borderless world, but we have local payment systems that have the need of interoperability both on the functionality as well as on the policy side and the networks, regardless of the underlying plumbing, whether it is cards, whether it is real-time payments, whether it is large payment systems which are nationalistic in nature, or whether it is even Swift. They need to have a way to be able to work in a hybrid model, thereby being able to solve for the larger problem, which is moving money at some point and now moving value, or being able to solve for credential participants in the ecosystem, whether it is a token which represents a card or it's a token which represents an asset, and having that ability to be able to be or do settlement in less than a few seconds. Because ultimately the goal with which we are all operating is that the person who is receiving money from his migrant father or mother in a small village in Vietnam should be able to pay the least fees possible to be able to get the funds. And similarly, for me to be able to sell my land, say if I own a piece of land in Dubai, I should be able to do it with trust, which is based in the system recognizing who the credentialed owner is. And for me, at some point in time, and obviously this might be a utopian goal for now, be able to settle the money in a way which is the most trusted way, but most secure, regardless of how the money or the value is moving. But so I think there are a couple of blocks that need to be satisfied. And these are the building blocks, which is trust to begin with. Then is the credentials associated with all the actors in the system. Then is identity, which is right now becoming almost the base foundation based on which we need to have payment systems operate. And then comes the infrastructure as well as the rails, which actually create the plumbing. Now, all of this is getting reformed in real time, and you said it so beautifully about the trust in the ecosystem and these players which are right now coming in where billions are moving. And we were having this chat earlier. The fact is billions is moving. But what does it actually mean for us? Are we still seeing those big shifts whereby we have credibility and we have an understanding as an end user or even as an end merchant of how this is changing? And I think that is happening in real time. So it will take a little bit of time to settle down. But I truly believe that the future is going to be hybrid in a way that all of this comes together, but should be mostly invisible to all the participating entities.
So, Monica, I think what you're saying sounds to me that a lot of these technologies that we're talking about are essentially just additional layers of plumbing that adds new functionalities. And at the end of the day, the users and the businesses that are transacting using these infrastructure really shouldn't care where they are, as long as there's a trust factor in there and you can tell who the counterparties are, right? So to your point, the identity in terms of where they are. So it very much sounds like the worlds are not competing with each other, it's more merging with each other. And maybe that's why, we start to see all these kind of crypto debit cards that are popping up left, right, and center that are using the Visa and Mastercard network, but essentially using a wallet-based account system with stablecoins inside, and essentially using that to transact. So I think that's a really, really good point that especially someone with your experience can really see through it. It's not a black and white type of thing, but much more a evolution, so to speak, right? And evolution towards the next phase. So let me ask you the next question then. So we think about blockchain, stablecoin, but at the end of the day, digital currency have many forms. I remember just a couple of months ago, I was in a meeting with the People's Bank of China, and very specifically talking about not stablecoin, but about CBDC, which is yet another form of digital currency that's much more driven at the sovereign level. I know with the association, you've had a lot of opportunities working with regulators and central banks in this area. And I think in India, if I'm not mistaken, the digital rupee is already live and transacting within the system, right? Can you talk a little bit more about that and what you're seeing on the CBDC side and potentially how it correlates with stablecoin that are living on blockchains?
So this is such a hugely important part of conversations, especially with regulators on our side of the world. In fact, it's almost become a debate now of how CBDCs and other technology will exist when it comes to tokenized money. So let me talk a little bit now. Why are the central banks conducting these experiments when we already have other digital forms of payment? I think this is where the crux of the debate and therefore the root cause lies, because we are not solving for inclusion in isolation now. It really doesn't matter whether there is a small villager, there is a small village in a very distant part of India. She or he who wants to receive that money or a subsidy really doesn't care how that money is arriving in their bank account or in their, or even in terms of cash. What they care about is that subsidy reaching them. And how do we enable that inclusion that we really desire with that subsidy payment can be made in real time or can be made without any pilferages in between? And this is where I feel that CBDCs can really create the and solve the problem of inclusion, because inclusion does not mean just providing access to technology which is thereby invisible or it is free. It is about being able to solve for the last mile problem, whether it is an offline payment that can be made, whether it is actually a agent, a correspondent agent who hands over the money, but the money should reach the recipient. And I think the all the sovereign central banks all across the world are looking at the test of whether we can pursue both sovereignty and inclusion, not at the cost of each other, but holding sovereignty responsible and important enough as a priority to not sacrifice inclusion that is needed with their own form of digital currency, which starts with a retail use case, goes into subsidy. Programmability becomes very important as they look at the use cases to solve the subsidy payouts related issues, and then looking at cross border, in which the wholesale side of the current way of being able to settle monies between central banks also can be managed via the CBDC route. And think about it again as a progress scale. Why are central banks doing this right now? Because whether we like to hear this or not, the fact is that the current ownership of tokenized money or digital money as we know it is with private players. And as a central bank, you do need to have a certain amount of control on the sovereignty of a national infrastructure, which is critical for various operations that are conducted that need a reliance and therefore need, and there is a large part of the economy and of countries that are dependent on this kind of solution. So I feel CBDCs in many parts of the world will go beyond the pilot stage. The central banks are definitely going to back it, and it is not going to be again an either or between other forms of money and CBDCs. It will be a form of how CBDCs will be able to solve certain use cases which have a G component, which means G2G, G2B, G2C, and thereby is driven directly with central banks backing that up and countries and populations adopting it because they know they have the trust of the central bank behind it.
I'm going to challenge you a little bit, Monica, right? You use the word inclusive, right?
Yes.
You use the word inclusive, financial inclusion. And I remember for the longest time in the crypto industry, especially those that are advocating for assets like a stablecoin that are on the blockchain to be more inclusive than centrally managed infrastructure and money, right? There's been this long time debate about like which one is actually more inclusive. One side of it says, hey, you know, if no one is actually controlling anything and I am the custodian of my own assets, then anyone are able to get access to it. What you're saying, however, is that the villager, as in your example, in the remote part of India, they must know who to trust. So if there is a form of digital currency that's actually coming from the government, they naturally would trust it more. So when we talk about inclusivity, which side of it is actually more real in that sense?
I think we are missing one important piece of any new technology, which is the ability to use it. I think
I see.
any technology that makes it almost like a replacement of what we do use today which is the bearer of the instrument, has absolute control over it, which happens to be cash. That will be the one that will ultimately reign supreme, whether it is digital money or it is anything else. We almost always forget that in terms of digital money, the capability to go cashless has always been there because the technology
Right.
solving the problem exists. But why many countries haven't become truly cashless is because you can't adopt and change behavior in a few decades. It's a long drawn process. Now, when it comes to financial literacy, think about the literacy aspects altogether. It is not about how well you can manage your money. You don't even know how to read, or you don't know what it is to use a tool or a technology as simple as a mobile phone. In that
Mhm.
essence, the ability to use modern technology or even stable coins becomes obliterated, where they need to depend on two things. Number one, the ability of the consumer to own their own destiny and thereby their own money, right? And being
Mhm.
able to completely manage it without the need of a centralized institution or a decentralized institution in the middle to manage this trust. And second is their ability to be able to settle without any such existing infrastructure. And both can be equally challenged and both can be tested in the current paradigm. However, this is not to say that in the next 5 to 10 years there will not be a quantum leap. However, I feel that the marriage of the two systems together is the one that will create the scale that we need in order to reach the last mile at the lowest cost possible. Because ultimately, regardless of whichever system seen, I'm sure you will agree with me that the ultimate goal is to reach that person who needs the
Right.
funds and at the
Right.
lowest cost possible. What is it that we can enable? Tech can solve every problem for you, but it cannot
Mm.
solve the problem of trust, and it cannot solve the problem of the last mile unless we throw money, we throw people, and we throw policy in the mix.
I find it interesting that a lot of these kind of digital asset stablecoin talk are driven out of the U.S. Primarily because there's now policy, clarity around it through the Genius Act, and obviously the largest stablecoin issuers today are still predominantly U.S. dollar based, and
Yes.
both of those companies have very tight ties to the United States. But at the same time, what you just shared, Monica, right? Reaching that last mile, especially in the global south, is actually where it's being used the most. It almost seems to be a little bit conflicting where the policy work, the issuance of these digital currencies versus the people that are actually using them are actually seemingly like two separate parties, right? And I'm always fascinated by what working with someone in Argentina or in South Africa or Nigeria, and they clamor on the fact that they can now get access to stablecoin, but yet it's a stablecoin, and the reason is they don't have a bank account and they cannot afford Swift. But then at the same time, they're using a stablecoin that's actually issued more or less by the same parties in different form, but different parties. So it's an observation that I have, and it seems to be a little bit conflicting at times. But I'm sure, as you said, this is still part of the journey. We're not really there yet, and we have to see where things go from there.
I'm so glad you said that, but I'll just add one thing to this. This is where I
Hmm.
think we need to have consumers also understand that everything that shines is not always bright. And the fact
Yes.
that the noise and the decibels are always going to be to go towards the thing that is the most easily funded at the moment. So wherever the money goes, all the attention goes there. But you have to understand that there must be intentions of why money is going to that particular technology. Again,
Hmm.
technology can solve everything, but we may be ending up paying for things that we don't realize. And this is why payments is also not just a tool for moving money. It is also about being able to manage the ecosystem that allows every participant in the ecosystem to thrive with fairness applied at every step of the way. And fairness is it's not to end capitalism altogether and not to make money of transactions, but to make it fair for every party which is involved to feel that they are getting value for what they are paying for. And this is where I think my small little disconnect happens when people talk about how technology is going to lower the cost of transactions, because when you
Right.
look underneath the hood, that is actually not happening, and there is enough evidence to show that.
Fascinating, fascinating. I remember reading a research recently, kind of debunking the fact that stablecoin transactions are much cheaper. But the reality is, as you and I both know, unless it's staying in stablecoin format, then yes, staying on the blockchain, then perhaps is actually cheaper. But the you and I don't spend money on the blockchain yet, at least not
Yes.
anytime soon. So
Yes.
if you add up all the transactional points, then the friction is actually still there, and because of the friction, the cost has actually become even more unpredictable, which is actually quite conflicting to some of the earlier thought process that we have in this space. Maybe we switch gear a little bit, Monica. I think if we're talking about money movement and we're talking about digital currency, then inevitably the notion of AI agents that are transacting on behalf of the humans have to come up. I mean, it seems to be across the news wire every day now, right? We're reading about these new X402 protocols and Mastercard experimenting agentic commerce and so on and so forth. So first off, maybe the first question to you is what are you seeing out of that space? Do you think it is still very, very, very early, or you think it's going to move so fast that before we know it, we're going to have more agents transacting on these networks that you talked about than even human actors?
Actually, I have a very boring old world view on this. Very, very boring. But I don't
Okay.
feel this will move very fast. I actually feel it will take the required amount of time because anything in the financial services world which takes off very quickly is always susceptible to also then a lot of scrutiny, which actually ends up impeding both the innovation as well as the scale. So
Right.
whatever has the ability to scale in phases and has regulatory clarity will always be able to create the impact and then create bursts in which it will almost have a hockey stick growth. And there are enough examples. You have UPI, you have Pix, but let's not even
Hmm.
go into these kinds of technologies. Think about the carded world, etc., because that is something that the old world sees best. But look at the amount of time the technology that was introduced in the early 2000s eventually became mainstream with Apple Pay in 2014. And even today, Apple Pay is being rolled out in multiple countries. So, what I'm really trying to indicate here is that you can always introduce a technology, but the ability to adopt it, especially as a global standard, always takes time. And we have enough evidence to say, even if we cut that down, I don't believe that the shift will happen in a year's time or 2 years' time. Having said that, I think the hype around agentic commerce is definitely not unfounded. We definitely need the ability to free up our time, and therefore delegation of both trust as well as tasks and decision making is definitely something that as a human, as a consumer, as a merchant, we all need, because in order to for us to grow both as humans as well as businesses, we need the ability for somebody else. And if technology can do that for us, why not? Because it frees us our time and actually helps us to do the things that we are best as humans, which is strategize, which is to think about ideas, be creative. Having said that, the agentic commerce rail that you're finding right now, the race that we are in, is because we have again multiple players throwing money at the solution in order to capture the race, to become the first mover, to become the second mover, and to capture the market. But having said that, like every technology, you'll have a lot of players, and then things will even out a bit and let the best one win. I personally feel that with agentic commerce coming in, there are enough questions that will be raised, but the countries and the regulators will need to come up with not just solutions that exist for their countries, but for them to have an ability to develop a playbook that can be understood and can be harmonized across jurisdictions. And that is where it becomes complicated, because there is AI, there is data, which is privacy attached to it, and then there is an ability to be able to understand the cross border element. And in agentic commerce, a lot of it comes together because you actually have a non-credentialed participant in the ecosystem who happens to be a
Right.
non-human.
Right. I was going to say that, right? I think one of the key
Yes.
things that I still have not been able to wrap my head is, in the traditional financial system, everyone needs to be, there needs to be KYC, everyone have an account. We know who each other are, the counterparties and everything. When you have agents that are doing it on your behalf, then how do you actually authenticate who's the counterparty on the other side? Because it might not be agents dealing with agents, right? I think in that sense, it might be okay. But if you have agents dealing a human or human dealing an agent, then all of a sudden the whole paradigm that our existing financial infrastructure sits on today for the past decades now all of a sudden completely break apart, right? So I almost feel like until we have some sort of universal identity ledger for kind of agents or God forbid robots to kind of register themselves and thereby be known to the system. I mean, until we get to that point, it becomes pretty difficult to move large amounts of sums, especially when there's still human actors that are involved. What do you think?
This is such a great question because you know I don't even know where to begin and how to answer this question because it has so many layers to it, and a lot of that is right now still being debated. So when you think about this from a policy point of view, suddenly the policy angles are relevant and therefore are debatable based on which side of the actors you want to not just protect but you want to actively engage with. Then there are jurisdictions which want the human oversight and the human in the loop, which we hear very often nowadays
Right.
in conversations around it. But the fact is that policy can only guide the regulators towards making decisions, but the technology is progressing at a faster rate than even we humans can understand, thereby now being able to monitor and regulate machines and being able to create laws which actually the actors in the ecosystem need to follow to make this a reality is where the complexity lies. See, when it's humans, you know how they behave. You have bad actors, you have good actors, but when a machine goes rogue, what happens with regards to accountability? What happens if the machine makes a wrong decision? Who do you hold accountable? Now these
Right.
are various questions that need answers, and some of these answers I feel that we are in the discovery stage for. So, and therefore I feel that the technology may be existing, but for it to be able to truly take off and create the scale, it will take time. However, that the discussions and the consultations are already in progress, and I do feel that the network side rules like we have created in the past are the ones that are going to win, whereby the entire ecosystem starts to participate in a network-like activity to create a harmonious set of regulations and standards that can be depended on, especially as these technologies start rolling out.
Monica, thank you so much. This is, I think, over the last 30 minutes or so, we've covered so much, right? We looked at the payment landscape, not purely from the latest innovation and latest technologies, including AI and agentic commerce, but also how the broader ecosystem plays. And I think the one thing that the audience will get from your insight is that this is not a one size fit all. There are many parties, many angles, different jurisdictions, different regions have different needs. So there are going to be various different experimentation and also execution that will be rolled out that may look different from one part of the world to another. But at the end of the day, all of that is going to push forward the payment industry, given all of the innovation that are happening, the policies that are being developed, and I think more importantly, the need for doing cross border is never ceased to be there, and we all need more efficient ways of doing that. So Monica, thank you so much for your time today. I know it's getting a little bit late for both you and I that are in the Asia time zone, but really appreciate your time and thank you so much for coming on the show.
Thank you so much for the invitation. I loved having the chat with you. And this has been the most fascinating conversation in this week. So thank you so much.
Thank you, Monica. I'll see you again.